Hey guys, welcome back. Hope you're doing well today. Well, 2020 didn't turn out to be exactly the year I was planning or thought it would be. I think you all can agree. But in this video, let's cover what were some of the biggest finance and investing stories of the year 2020 and what are my thoughts on them. And if you're a buy and hold investor, then this was a good year for you. If you had just bought at the beginning of the year and then held through the entire pandemic, you'd be up about 14%. So this, on average, was an above average year for the buy and hold long-term index investor. So pretty good for you. Now, yeah, there was that scary crash in February, March. The market peaked on February 19th and then bottomed out on March 23rd. That was a 34% drop, which is pretty unprecedented in stock market investing. However, if you had timed it perfectly and bought in on March 23rd and rode it back up, you'd be up about 66%. And one of the biggest news stories this year was the change in the Dow Jones Industrial Average. ExxonMobil was kicked out of the Dow Jones along with Pfizer and Raytheon. Companies that were added were Salesforce, Honeywell, and Amgen. And this is kind of a big deal. It's kind of a changing of the guard from old investments. You know, ExxonMobil for the longest time was America's largest company, and the oil and gas company stocks, the bank stocks, they're not doing too well. What is doing well is technology stocks. I think the FANG stocks, you can argue they're overvalued slightly based on their valuations today, but these companies are not going anywhere. People in India Google things, people in Japan watch Netflix, people in Germany buy iPhones, people in Myanmar use Facebook. And of course, Amazon is just taking over the world. None of these companies are like Pets.com in 2000. These are all becoming global monopolies on search engines or advertising or the App Store. I don't know what regulation might be coming from not just the American government, but foreign governments to slow their growth, slow their spread, because they are just becoming too powerful. However, based on the political landscape in America, I don't really see these companies being broken up in the near future. So if you're investing in the FANG stocks, you're probably going to continue doing well into 2021. The other big story of 2020, in my opinion, was zero commission trades from all of these large investment banks that transitioned to zero commission trades. Robinhood several years ago came onto the scene with a fantastic idea. Let people buy and sell on the New York Stock Exchange for free, $0 commission trades. And their growth was so alarming to the large investment banks that they all just had to adjust. So TD Ameritrade, Vanguard, Fidelity, Schwab, they all moved to zero commission trades. And this has led to an explosion in new investors, people getting into buying and selling stocks on the internet for the first time in their life. And what's alarming is that we've only seen good times. The stock market has been on a clear upward trend since the 2008 financial collapse. And there's a lot of people who are currently trading who think they're investors, and they're really not. There's a difference between investing and trading. If you buy a security with the intention of holding it somewhat long-term, preferably a year or greater for long-term capital gains, favorable rates, then you're an investor. However, if you're buying a stock hoping to double up in the next month, you're a trader. And there's become this swarm mentality, in my opinion, on these $0 commission brokerage accounts of people just buying whatever is going up because it's going up. They're not looking at any of the fundamental analysis of what's their book value, what's their PE ratio. They're not giving any math or metrics to why this company should be going up. They just want to get in on it while it is going up and then bail out at the first sign of trouble. And probably the most prominent example this year was Nikola. Nikola was a fake company. This was never going to be profitable. And it's one of these SPACs, special purpose acquisition companies. I'm not saying all SPACs are bad. I'm not saying never invest in a SPAC. However, if a company with very good promotions appears out of nowhere through a SPAC, it's because they avoided the scrutiny of their books through the normal IPO process. So if you're going to invest in a SPAC, be very careful because there are lots of people out there looking to scam these traders. I think serious investors would have seen right through Nikola's BS. That promotional video was 100% fake. It was just a truck rolling down a hill. But there's a lot of traders who said, hey, you know, it's going up. I got to get in on this. And if you bought at the height of Nikola's stock and you've held it since then, you're down almost 80%. Anybody who bought Nikola, I don't think you're ever going to get your money back. And then there's Tesla. Tesla ran up over 700% this year. Now, Tesla is a real company with a real product with real customers. However, this valuation to me is insane. People, once again, traders, are buying Tesla because Tesla stock only goes up, right? And there is no technical analysis that you can show me that explains why it deserves this $660 billion market cap. Tesla right now is like the 8th or 9th largest publicly traded company in America. It's bigger than Berkshire Hathaway. And I'm not saying Tesla is not a great company. I would love to buy a Tesla car in the next 2 or 3 years. However, their future value has been priced in probably a decade too early. This valuation is probably where Tesla should be 10 years from now. And what I want to look out for and what I'm waiting to see is what happens after March 18th. The markets all bottomed on March 18th. So anybody who bought Tesla stock after this time, in 2021, past March 18th, they will have held it longer than a year, meaning they can cash out and get long-term favorable capital gains tax rates. So what I'm predicting, and I could be wrong here, but after March, I think the fever around Tesla stock is going to cool off, and it's just going to kind of slowly fizzle down. There's definitely people who love this company. They believe in Elon Musk, and they're going to be investors buy and hold for the long run. But do I see Tesla stock going up another 700% in 2021? No, that's insane. There also was this IPO fever throughout the entire of 2020. People had cash to invest, and they were looking for anything that seemed reasonable. And these IPOs were already probably overvalued from the syndicates that did the books for them. But Snowflake, Airbnb, Grubhub, all of these basically doubled their IPO price on the first day. And Snowflake, once again, is a legitimate company that I think someday will be in the S&P 500. However, the valuation given today, they're just pricing in way too much for future growth. And if you're a long-term investor and you want to hold on to it, great. But as soon as the traders realize it's not going to keep going up, they're going to bail out and we're going to see a contraction. With Airbnb, fantastic company. I love using Airbnb, but they don't own anything. Airbnb is a software company. It's their independent contractors that actually own the property that people stay in. So their valuation to me just doesn't make any sense. Same thing with Grubhub. Grubhub has never made money, and the food delivery service is an oversaturated market. I don't think Grubhub will ever make money. And for these IPOs, they're a way for the original investors to cash out. By publicly selling on the New York Stock Exchange, traders will jump in, and then the initial investors can cash out. And that's what I think people need to be cautious of with IPOs. If you like these companies and you think they're going to do great, I talk more about this in my IPO video, but just wait a year. Give 12, 13, 14 months for the original investors to cash out, and then potentially you can scoop up one of these new companies publicly listed at a better price than their IPO. And then there's Bitcoin. I don't understand how people keep falling for this every 2 years. Bitcoin just does this. There's a lot of media hype, and then the value of Bitcoin just goes vertical. It was up like 5,000% in 2017 before it peaked, and then it lost 80% of its value. I'm not saying Bitcoin is a bad long-term investment. I actually do think it is. However, you shouldn't be buying it at these prices. There are traders swarming into Bitcoin right now. And the second they realize it's not going to keep going up, they're all just going to jump out. And I'm predicting in 2021 that Bitcoin will probably lose over 50% of its value. It's over $20,000 a coin. It's probably going to fall back down to like 10,000. And at that price, I might consider buying a Bitcoin. I don't know. And there you have it, guys. I learned a lot in 2020, and I hope you did as well. I'm definitely going to be posting and making more videos about current events and finance and investing topics, so I hope you look forward to that. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, consider subscribing to my channel if you haven't already. If you have any comments or questions, or you have your own investing goals, let me know in a comment down below. I love hearing from you guys. And until the next video, take care.